Hey traders, what's going on? Jamie Saettele here. Scandinavian Capital Markets and SB Trade Desk. It is Friday, January 28th, 2022. Coming to the end of a pretty wild month to start off the new year. As many of you probably know or have seen in the headlines, it is the worst start to the year for the equity markets in the U.S. in its history. So I'm going to change it up a little bit here. We usually start by looking at dollar and FX stuff, but I actually want to show you some long-term charts of some equity ETFs with my volume indicators. So we're going to start by looking at DIA, which is the basically the Dow Jones Industrial ETF. And I look at a lot of these ETFs for signal purposes. I don't trade these vehicles. There are better things to trade, but I do find them useful as far as signals, and that goes for even currency ETFs as well, but I won't trade those. I'll trade spot. So this is the volume reversal logic that you may have heard me talk about before. The idea behind it is that you get a big volume thrust higher or lower, and then the immediate next period is a high volume move in the opposite direction. So what we've got right here, is, January is coming to a close, so that will end, I guess, on Monday. February 1st is Tuesday. So these are monthly bars, okay? And the red and blue bars that you see are going to be when volume is in one direction down by at least 20% more than the average 12-month volume. And the next bar is at least 30% higher in the opposite direction, okay? So the idea being it's a trap. So like there's a lot of buying into a high, and then the next period is a lot of selling. And the opposite for projected lows would be a lot of selling into a low, and the next month is a lot of buying. Okay. We've got some questions coming in, so keep them coming, and I will cover it. Nishant Patel asks for Ethereum. I will look at that for sure. For now, I want to go over these equity charts real quick. So what we're going to end up with here is a big volume reversal signal in the Dow. Okay. You can just look at the chart here over the last, 20 plus years. The sell signals we got one in May of 99, would have been a little early, but you get the idea. We would have had two of them, one in June 07, one in November 2007. Obviously, this was the financial crisis. We would have had one here in February of 2018. Preceded, a more or less sideways to down market, and we're going to get one now. So take that for what it's worth. Point is these are simply objective signals with volume and price. Okay. Now we're looking at the exact same indicator with volume. Again, the volume reversal logic, and we are looking at the NASDAQ or the Qs, QQQ. Right. We've had, since inception of the Qs here, we have had three signals. One in April of 2000, okay? Tech bubble burst. One in November of 2007, financial crisis, and one right now, January 2022. Let's look at SPY. SPY, a little more... lot of false signals during the run up back in the 90s, right? We had one here in 98. I think that month there, what was that? That was August 98. What was that, like a Russian default or something? We had signals in June and November of 07, just like we did with the Qs and the Dow, or Diamonds, DIA, and we had one in February 2018, just like we did with the Dow, and we're going to have one now. And again, you can see we also get buy signals here on these things too. So My point here is that this isn't like some sort of narrative where it's bearish to be bearish. There's an actual monthly volume reversal signal that's happening across all three major ETFs that represent the indices: DIA, QQQ, and SPY. So I don't know. It might pay to pay attention to those. Let's move on and look at some charts. Since we just looked at these equity indices, why don't we go and take a look at the actual indices? So this is a channel, goes back to the March 2009 lows in the S&P. Okay, been showing this chart for a while in my posts and in these webinars, and we've rolled over. Really haven't even gotten to the first major support. The first major support, I'll go to a daily now. The first major support is probably like 39.90. Okay, that is going to be this. You see this magenta line here. That's a line that goes off of the Jan 2018 high, February 2020 high, and it cuts through what was resistance, and then it became support. Very precise support at that. What's interesting here too is that if we take this range that we've had this week, right, and just do a measured move. So here's a measured move. That gets us to the exact same level, okay? Literally the exact same level, 39.89. So to me, that is a level that I would circle. I would draw it on your piece of paper and put it on your desk, just so you know that 39.89, 39.90 is huge, okay? So with that, I will move on to our regular scheduled programming in FX. All right, so DXY, okay? Dollar, I was caught off guard by the move higher. I think a lot of people were. It looked like we were breaking down here in mid-January a couple of weeks ago. It was a false move to the downside, and fake outs tend to go very quickly in the other direction. But we now have gotten back into resistance, or at least the bottom of the zone for resistance, right? So that zone is defined by a trend line, the underside of a trend line that goes back to 2011. Okay, so 2011 low, 2014 low. You can see that cuts through levels here that was resistance on the way down into the earlier or early 2021 lows in the dollar. It was resistance back in November, and we are back to the level now. All right, now there are a little, higher levels that I would look at. The 618 retrace of the move down from the March 2020 high, it's going to be 97.73, and that's in line with resistance back from June, July of 2020. Okay, you've also got channel lines, trend lines that are up a little above that. Again, this is DXY, so this is very Euro-centric, but just kind of know or understand that we are into the bottom of a massive zone where it's going to, be important to pay attention, especially going into a new month. Something that I've noticed trading over, FX for 20 years, basically, is that time, the new calendar year, new calendar month, all those things tend to be very important, right? That's when you can see new shifts in trends and reversals, early in the month, and the statistics actually bear that out. So pay attention early next week. From a very, very, very short-term point of view, I would argue that we probably have a little pullback here in a fourth wave in the dollar. We get one more push higher before it's time to go lower, but I don't want to get too cute with that. Bottom line is we are into resistance, and I would take any big reversal signals at face value at this point. All right, so Euro, moving on to that. Daily chart going back to the 2014 high. We've got that trend line. We're back on it. Okay, we are trading right now 111.60. More questions coming in. Great, keep them coming. I will definitely get to dollar yen as well as Ethereum. So Euro, top side of that trend line back to 2014. And this, you'll see me talk about what I call daily and weekly reversal supports and resistance levels. All that means is, so like the low bar of a move, in this case, this is a weekly chart, all right? You can see this was the low bar, March 2020. Draw a line over that close, okay? And that is your estimated support. It's called weekly reversal support. We've tagged that, and we've responded. I mean, we're 30 pips off the low, you know, nothing to write home about here, but we are at an actual level, okay? So I would pay attention to, you know, euro heading into next week. If we can establish a little base, you know, it's all about finding points of reference. And a point of reference that I would use would be your highest volume level, which at this point is 112.50, okay? So 112.50, we're currently trading 11.63, but 112.50 is your high volume level, which was from, I guess that's the Fed meeting on Wednesday, and that was the hourly close of that. So if you can establish above that, that actually gives you, you know, kind of a rules-based type of, you know, reason to actually be constructive. But we are at support. We have responded to support, albeit, you know, at a very, very small scale so far. Looking at cable, I actually like pound down here. So this is a 4-hour chart, but something to remember is the lows back in, first of all, don't forget, like, cable has not made new lows, okay? Right, we're still holding above. So that in itself is some information, because you've got, you know, you've got euro making new lows, pound's not, you know, pound's got relative strength, but we hit VWAP back in November and December. We hit VWAP from the March 2020 low, and we held that, okay? All cable's done since then is pulled back to the 618 retrace of that rally, okay? And we have responded to it, right? So, you know, this in and of itself is just a trade. That's a little scalp. However, if you trade through this channel or this fork right here, which essentially trade above 34.50, it gives you reason to be constructive for cable. All right, let's look at dollar Swedish krona, which is coming into a massive level. Almost hit it today, but the 618 retrace of the decline from March 2020 is 950, okay? We didn't quite hit it today, but I think we hit this high actually back from June. Yes, we did. Be very interested to see kind of the headlines this weekend in the papers, to see if we get any extreme, you know, dollar headlines. Like, so far we're getting, you know, dollar soars, we're getting, you know, gold spirals. Here's one from Yahoo Finance. I'm looking at, if you just go to US dollar, Google News, US dollar among top trades after hawkish Fed. That's not the kind of thing you see before a massive move higher. Let's move on to dollar yen, which was a question before. All right, so dollar yen putting in a pretty good reversal here. Something to consider. You see these magenta lines here. These are fib retracements. So from the 2015 high down to the 2016 low, 618 retrace is 1550. It's a pretty sticky level, right? We topped there back in November, had a very earlier kind of fake out move to the upside, which we talked about during these webinars. If you remember the square root progressions that we talked about, and kind of nailed that top. In fact, the close, I think, was the exact square root progression, one square root progression to the upside from the euro open. Guess what we did today? We traded through 1550. Now we're reversing the downside. So again, to me, this is resistance. I like selling at resistance, right? Kind of, you know, pretty simple. Keep it simple that way. Got a bunch of questions coming in. All right, so here's a question about volume. Does volume matter in Forex? Does volume matter like FXCM real volume matter or just CME? So, all right, it's a good question. All right, so FX is not a, there's no centralized exchange for spot FX, right? Like the volume that I look at, which I use as a proxy for the market in general, is futures volume. Because you're right, there's going to be, you're looking at volume at different, different market makers. So I do look at futures volume on the CME for currency futures to, as a proxy for, for volume in general. So like that's what I would do. I haven't experimented with looking at volume at different market makers, but yes, volume does matter. Absolutely. Like, if I were to show you big volume down, and big volume reversals, like they work just as well in FX as they do in equities and indices and other commodities. Here's another question. Many charts on big support, like Aussie. Should we expect acceleration to the downside? So, look, all right, we just looked at Euro, which is a big support, and dollar yen a big resistance, and DXY a big resistance. Let's look at Aussie, though. So Aussie, yes, Aussie is sitting at a big level. It looks like it's trying to crack that level, but yeah, we are at a huge spot here. This is not a chart that I would want to be buying at the moment, irrespective of my view on DXY, which again is going to be more, Eurocentric. And you can kind of see that if you look at, like Euro Aussie, for example. Okay. Euro Aussie itself actually looks like a decent long setup. So this is a pitchfork back to the 2021 low, which is back in February of 2021, just about a year ago. And you can see the median line was perfect resistance. We had support register actually just last week. The 25 line that we talk about, it's a midpoint between that lower parallel and the median line, has actually acted as resistance several times. We're there now. This line off the, I guess it's the August and December highs. If we crack through that, this is a legit breakout. All right, so, don't, say that just because DXY is at resistance doesn't mean that like, Aussie can't underperform, say, against Euro. And you're seeing that like in the Euro Aussie cross. This to me looks like a pretty big base. And I mean, just look at it from a very, very simple standpoint. Look to the left of the chart. This is support, right? Huge support, kind of that 153.50 level. It's been massive for years, right? We're looking back. This is 2014. This is a spike back in, May 2010. That was the flash crash, right? These levels are sticky. So I would not, here's a question. What leverage do you think is recommended for? I am not going to venture into that world. Everybody is different with their risk tolerance, so I'm not going there. One market that is very interesting to me right now is gold. So this is spot gold. Recall that the high was all the way back in August of 2020, right? A lot of people forget that we topped like, a year and a half ago in the metals. So from that point, everything here looks corrective to me, right? You got 3 waves down. The low was in March of 2021. And since then, you have this contracting move that is also known as a triangle, right? So the question is this a triangle? Is this a bullish or a bearish triangle? I think we're going to figure that or get that answer pretty soon. Because here's how this will work Elliott wave wise. 3 waves down, this would be a big A, triangle, wave B. If we break down through this trend line, which is like literally 17, 70 or so, which is $16 below spot, we would have a C wave that takes us a lot lower. Okay. Now, to me, that doesn't make a lot of sense, just considering, that dollar yen is trading at a massive, massive resistance level and responding in kind to it. And euros at support and DXY is at resistance, blah, 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 but you still have to entertain all options. So heading into this, I'm looking for gold to find support and try to break to the upside, right? But if that doesn't happen, you kind of have to go with it, right? It doesn't matter what you think. The market's going to do what it's going to do, whether you agree with it or not. So point being is that we are coiled up in the gold market. And if we break down below here, watch out to the downside, and gold might trade a lot lower than people think. Okay, let's look at a trade that we're kind of involved in right now, which is Aussie Yen. All right, so this is a great example of channel trading, median line trading. So we traded down to this. So you just draw this channel, very simple channel. This is a 4-hour chart, by the way. Market trade that. This was, I guess, on Monday, right? Market trades down to the center line. That confirms the channel. This is textbook. At this point, you're looking to sell a bounce into resistance. Where's resistance? Well, resistance is former lows. It's also this 25 line, which itself was actually support and cuts through a bunch of lows over here. That was fed right here. Short. Here we are at the center line. Watch out, because heading into a weekend, we are sitting at the center line. We have gap risk here. Okay. We could gap below this over the weekend. Your natural level to look at is the 75 line, or the level that is symmetrical or equidistant from here to here to here, okay? That happens to line up with former lows. It's like if I were writing a textbook about channel trading and median line trading, I couldn't draw it any better. This is perfect. So watch Aussie Yen over the weekend. Again, this is gap risk over the weekend here. What I'd be looking for is something like this. Trade down here. This median line here, which was former support, becomes resistance. And then you head lower to the bottom of the channel. Again, I'm not saying that's going to happen. I'm just saying that is how this market is trading. It's trading perfectly between all these levels, right? This is exactly what you want to see. Okay, there's a lot of questions. Let me take a look at these. Hold on here. Oh, Ethereum. That's right. Hold on. We'll take a look at that for sure. Give me 1 second. Go to that crypto stuff. Here we go. All right. Before I do that, it's actually a good time to remind you guys that we are looking for profitable traders at Scandinavian capital markets. So if you want to make your journey or take your journey to becoming a money manager, we've launched a new version of our prop trading program. So we're funding up to $1 million to traders, given that you pass the assessment. No monthly fees, no time constraints, just get funded and trade. It's that simple. So check it out. Go to scandinavianmarkets.com/getfunded. Okay, so if you are a successful, profitable trader, go to scandinavianmarkets.com/getfunded and become a money manager with us. All right, so Ethereum, we had a question on Ethereum. I'm going to start actually with Bitcoin because it's a little clearer to me. So first of all, median lines again at work. I posted this earlier this week. We came down and nailed the center line, and the Aussie Yen chart we just looked at. This is the exact same thing. So we hit the center line. So your natural spot to look for the next move is higher to the 25 line, which was resistance for this fall, right? That's going to be in line with former lows around 42,000 up here, okay? Now, let's say that you don't get there. Let's say that you break below. If you break below, then you would look for this line, the center line, to become resistance, right? It's a series of if-then statements. Here is Ethereum. So Ethereum is not that clear to me right now, but I actually did a thing with the trading battle at the very end of 2021, and we had these predictions, right? They asked us for these predictions, and mine was that Ethereum was going to trade down to $1,000 in the first quarter, and then eventually go to new highs. So I'll stick with that. Again, I think this is a massive fourth wave. Now, it's possible that we end up going sideways for, a prolonged period of time here, in like a triangle or something. But from Ethereum, the question specifically was, what do I think about Ethereum? I think that if you trade up to, 3,000 or so, that's resistance. Why? You see this VWAP. This is a volume weighted average price from the high back in May. It's been a massive pivot, right? Resistance, resistance, support, support, huge breakdown. If you come back to it, look for that level to provide resistance. So again, about 3,000 or so for resistance, support down close to $1,000. Again, not a prediction, just kind of laying out the levels as I see it. All right, let's see what else we got here. Any other questions? Okay. Nothing else, it seems. So I'm going to wrap it up with that. Again, the big takeaway from today's webinar is, is really those monthly signals that we're getting, those huge reversal signals that we're getting in U.S. equity indices. We haven't seen reversal signals like this. We saw some in February of 2018, but before that, you've got to go back to 2007 before the financial crisis. Before that, you got to go back to 2000 before the tech bubble burst. So again, things that we should probably pay attention to. And here's a question, late question coming in. Can you explain about the fork? Well, that would be like an entire course, which I'm actually working on putting together. That will be a big part of it for sure. So don't have time to do that right now, Gabriel, but we will definitely, try to put that education out there. I'm working on that right now. Hopefully have something out in a couple months to teach about that. But very, very quick. It is kind of a way of, it's a channeling technique. It's the best way to explain it. It's about trying to identify the slope of the market, right? And not just the direction, but like how the market is trading on support resistance. And it's a channeling technique, and it would take hours and hours and hours to go through all this. So working on that, and hopefully have something for you in the next couple months. All right. Okay. So for now, that is it. Again, Jamie Saettele here signing off. January 28, 2022 with Scandinavian Capital Markets and SB Trade Desk. And I'll talk to you later. Good luck.